Okay, so the focus today is going to be on Bitcoin exclusively. And this is very important because we have to realize that Bitcoin is not just a coin, it's not just a crypto coin. It is a movement, it's a revolution, it is part of the paradigm shift that has been underway since 2009. Now, before we get into all of that, I want to discuss briefly what you'll be looking at, giving you some context here. For example, what you see in front of you is a Bitcoin black box forecast versus actual price and key developments timeline from 2013 till December 2018. This is just an example of the type of forecasting, how I do my forecasting work and projections. So in what you're seeing here is a black box. And what a black box is a technology that is utilized by financial and mundane astrologers to make long range forecast using multiple factors. So a black box provides the ability to create prefabricated models and the ability to then graph those models on a projected timeline to determine a specific or to determine a specific outcome. And these models are based on aspects between planets, planets to houses, planets in houses, planets that rule a house, planets ingressing in a house, etc. And these models are very complex and are created by giving different weights to all the criteria within the models. Then the program uses these weights to calculate and display a potential graph within a time frame. Some forecasting modes use only transits, while others will use a composite model, depending on what's being measured, depending on what's being forecasted or what the emphasis of the forecasting technique is. So essentially, what you're looking at here inside, when you see the production of these type of graphs that you'll be seeing in the future as you within your membership, within your crypto membership, these type of graphs are based on these uh, various different forecasting techniques where these planetary alignments are given weight. So it's not important that you know the specifics. Just understand that every factor astrologically has a particular weight that's being measured against the price movement of a particular cryptocurrency. We could do this, of course, with anything that we have big data on or any type of price data. We can do that. And the black box is very dynamic in being able to correlate that data and make adjustments to make accurate projections going forward in the direction of the price or the network effect. This is an important thing because one of the things that many people get confused with is looking at these graphs and saying, this is when the price is up and this is when the price is down. And this is when I can buy the dip. And this is when, I can hold out and then buy the tip here. And then I can hit the high and cash out here. And it was never designed for that. What the black box does essentially is look at, in terms of crypto, the value and development of the network effect. And then from that basis, we can use other techniques, layer other techniques to determine price movements where potential prices, right, where price destinations will occur. So in other words, the black box could be very strong here, but it doesn't indicate the price. This is where we have to use, we have to intuitively use a number of other techniques for that. However, the black box is extremely accurate in terms of long-term development or long-term decline. If we see a long-term development, then we know we can be very bullish on that instrument, on that currency, on that coin. And if we see the black box trending downward, we know that there is some issue specifically in terms of crypto. There's some issue with the network effect. There's going to be a fork. We've seen historically, there's going to be a halving. We'll go into all of that. But the black box and all of these type of graphs are not to be used for day trading purposes. That's where you get in trouble, and they were never designed for that. And of course, as most of you know here, this is all about investing, developing a strategy for investing, not for day trading. This is not designed for day trading investors. This is designed for long-term, moderate to long-term investing. You could even use some short-term investing cycles, which we'll discuss today as well. But this is not designed for day trading. So I want to make that clear. Okay. So again, when we do these black box forecasts, it takes in all of these factors. We're able, with these astro signature models that I developed, is based on the correlation of Bitcoin's value history in this example in comparison to the US dollar and other astrological planetary transits, or planetary transits, I should say, to the Bitcoin horoscope. Now, so I want you to keep that in mind, that we're looking at multiple things and we're seeing where they all converge. Now, the basis, of course, has to do with, and I would say this is not just the chart, the horoscope of Bitcoin. This is the birth. This is the horoscope of decentralized finance, or decentralized digital finance. So this is the horoscope of Bitcoin for January 3rd, 2009. And this is on January 3rd, 2009, the Bitcoin network was created when Satoshi Nakamoto mined the starting block of the chain known as the Genesis block of the world's first decentralized cryptocurrency. Now, this was a result at the day and time, right? We could see here, disrupting banking control of the money supply. So the Times, 03 January 2009, Chancellor on the brink of second bailout for banks. This was the text embedded in the first Bitcoin Coinbase block. And so this note references a headline published by the Times, and has been, the UK Times, I should say, and has been interpreted as both a timestamp and a comment on the instability caused by the fractional reserve banking system. And this note embedded into the first Bitcoin Coinbase block references that headline published in the Times, that is referencing like the purpose or reason that Satoshi Nakamoto actually created Bitcoin right at the beginning, an onset, or should I say at the height of the 2007 to 2009 global financial crisis. So we could see here that Bitcoin came out of a crisis, and this crisis was precipitated by the Saturn-Uranus alignment. The Saturn-Uranus alignment, right, correlated with the development of the 2008 Lehman financial crisis. So it was a buildup, right? It was a buildup of developments where the subprime mortgage market began to collapse, right? We saw real estate prices going up while the subprime mortgage began to collapse. And so right here, you're looking at the Saturn-Uranus opposition alignment. Saturn-Uranus opposition alignment, November 4th, 2008. And at that time, the Fed innovated by creating QE and injecting massive amounts of money into the system, into a failed banking system. The Bear Stearns bailout occurred. The Freddie Mac and Fannie Mae bailout occurred. The Lehman Brothers bankruptcy triggered a global recession. The credit markets froze throughout the world. The stock markets crashed around the world, plunging, fueled by the 2007 subprime mortgage crisis, the $700 billion public bailout, and the Federal Reserve secretly injecting $16 trillion into the global economy. So that occurred at that time. Now, why is that? That's relevant and important because this is the core. This is the drama. This is the shock. The shock to the system was actually one of the fundamental, right? The fundamental purpose and drive to the creation of Bitcoin. As we could see in the Genesis chart, just a few months after, right? So we had the November Saturn Uranus exact opposition at the time. The world financial crisis was in full bloom. And we could see here that Uranus Saturn opposition right on the ascendant descendant axis.
Watch the full presentation of this webinar in the Crypto Astrology Group membership at gta.williamstickevers.com or click the link in the description.